This is OwlUp, where learning happens in minutes, not hours. For a deeper journey, explore all our courses at owlup.co. Now, let's dive in. Welcome back to Chapter 3 of How to Build Generational Wealth, where we're diving into stock market mastery for beginners. Today we're breaking down everything you need to know about how the stock market actually works, from what stocks really are to how you can start investing without feeling completely overwhelmed. Let's get into it. The stock market has quietly turned a few dollars a day into lifelong wealth for ordinary workers, often beating savings accounts by a wide margin. A teacher, a nurse, a freelancer, each checking their phones, see red one week, green the next. Why do some stay calm and others panic? Some treat those red and green numbers like a noisy group chat, annoying but ignorable. Others let a single bad day dictate their next move, selling at the worst moment or chasing the latest hot pick a friend mentioned over coffee. The difference isn't luck or secret information. It's having a simple, sturdy framework before you ever place a trade. In this series, we'll build that framework step by step. How to translate your real life, rent, kids, dreams of a sabbatical, into concrete investing goals. How to choose between owning broad baskets of companies or a few individual names. And how to stay steady when headlines scream. Think of it as learning the rhythm of markets, so you're not dancing to every random beat. Instead of starting with a trading app, we'll start with something less glamorous but far more powerful: your constraints. How long until you need this money? How steady is your income? How well do you sleep when things feel uncertain? These answers quietly decide which paths are even sensible for you. From there, we'll zoom out to how ownership in real businesses grows as economies expand, and why headlines often distract from that slow motion. We'll also set the stage for the tools you'll actually use: index funds, simple check-ins, and clear rules for when you won't touch your portfolio. Most beginners start by asking, "What should I buy?" A better starting question is, "What job do I need my money to do?" Different jobs require different tools, timelines, and levels of risk. Some money has a short fuse: next year's move, a planned career break, a looming tuition payment. Other money is long fuse: decades away retirement, future kids support, a dream to work less at 50. Treating all of it the same is like using the same tempo for every song. Technically possible, musically awful. You want separate buckets, each with its own tempo and tolerance for volatility. Begin by sketching 3 rough buckets. Near term, money you might need within about 3 years. Medium term, 3 to 10 years. Long term, 10 plus years. You're not carving stone tablets, you're giving yourself a working map. The reason this matters is hidden in plain sight. Prices can swing wildly in any given year, yet historically, those swings smooth out over longer spans. Short horizon plus big swings equals trouble. Long horizon plus big swings equals often acceptable, sometimes even desirable, because larger ups and downs tend to come with higher expected growth. Next, match each bucket to how you actually react when things move, not how you wish you'd react. Think back to a time money felt uncertain: a job scare, a big bill, a bank glitch. Did you obsess over every update, or shrug and adapt? That instinct will show up again when a position drops 20% on scary news. This is where risk tolerance stops being a quiz result and becomes a concrete rule. For example, if this account fell 30% on paper tomorrow, would I change my life plans? If I saw that drop, would I be tempted to sell everything? If the honest answers are yes, that bucket probably shouldn't be heavily exposed to sharp swings. You can still pursue growth, but you'll blend in steadier assets or slower contribution plans. Finally, tie it back to behavior. Clarity on buckets and tolerance lets you pre-decide what future you will do during chaos. Instead of debating every headline, you're checking one thing. Does this event change my time horizon or the job of this money? Usually, it doesn't. And that quiet no is one of the most powerful skills you'll build. A practical way to test your buckets is to cast real dollars into them. Take a few everyday examples and see where they truly belong. Say your friend texts about a weekend trip that'll cost you $400. That's clearly near term. A certification course you'd like to take in 4 years? That's medium term. The hazy idea of helping a niece with college 15 years from now? Long term. Notice how the same $100 can feel totally different depending on which role you assign it. Think of it like building a 3-part playlist. The first is for today's energy, short, punchy, predictable tracks. The second holds songs you don't mind evolving over time. The third is made of long, sweeping pieces you're willing to sit with even when they get dissonant before resolving. You'll also discover conflicts. Maybe you want money for a home deposit in 5 years and for life at 65, but only have capacity to fund one aggressively right now. That tension is useful data. It tells you where trade-offs and prioritization decisions really are, long before market swings test your resolve. Volatility itself will keep changing shape. New industries rise, others fade, and entire regions open up, like fresh rooms added to a house you thought you knew. That means your buckets aren't set and forget. They're more like a map you redraw as your life and the world shift. As tools like fractional shares, automation, and AI filters spread, the real edge becomes judgment, choosing what to ignore, what to learn, and when to revise your plan without rewriting your story. As you refine these buckets, you'll notice they nudge daily choices, taking extra shifts, delaying a gadget, automating a transfer. Tiny decisions become like recurring background apps, quietly compounding in your favor. Over time, this turns abstract future plans into concrete habits, so market noise feels more like weather than a verdict on your path. Start with this tiny habit. When you unlock your phone for the first time each morning, tap your Notes app and type the ticker symbol of just one company you already use or recognize, like AAPL for Apple or MCD for McDonald's. Then, without scrolling or researching anything else, add exactly one detail beside it. What do they sell? Or, how do they make money? And close the app. That's it for the day. No stock buying, no deep research. Just building the reflex of linking real-life businesses to actual ticker symbols, one company at a time. This was OwlUp, your daily step forward. This series continues with more chapters on OwlUp.co. Visit OwlUp.co to access the complete course and continue your learning journey. See you there!